I'd like to welcome everyone to our Roadmap to Medicare workshop. We have the honor and privilege to have Tracy Russo, President and CEO of HTA Financial, joining us for our presentation today. I know Tracy for almost 20 years now, has been a great partner to the firm, a great resource for all of our clients. And we're very fortunate to have her presenting today on all the things there are to know about Medicare enrollment and all of the things to look forward to as we approach that kind of 65-year-old range. So without further ado, I'd like to introduce Tracy to present to us on Medicare. And please know that we are open to any questions you might have. Chances are, if you have the question, someone else on the webinar will. So kindly do not disrupt the flow too much, but please feel free to answer or ask any questions along the way. Interactive presentations are much more easy for both Tracy and myself. So we welcome questions all along the way. So please feel free to kindly interrupt and then ask any specific questions you might have along the way. And without further ado, I'll turn it over to Tracy.
Great. Thanks so much, Dean. Good afternoon, everyone. How are you today? My name is Tracy Russo-Kesey. I'm the President and CEO of HTA Insurance Services. We specialize in helping people figure out the onboarding process with Medicare. And as Dean mentioned, I definitely welcome questions as we go along. Feel free to type them in the chat, or if you'd like to, you could certainly unmute and ask those questions. But I'll try to keep an eye on the chat, and Dean and his team will as well, and they can certainly interrupt on your behalf. So just to go ahead and get started, I'm going to give you a quick overview of who we are and what we do, because a lot of the times we find that people find the Medicare onboarding process very overwhelming. So at the end of this day, I'm going to give you a lot of information to walk away with, but don't be concerned if you don't remember any of it, because we are here to help you through this journey. So we help simplify and solve the Medicare process. We start from pre-retirement. So before you're even thinking about retiring or turning 65, we'll help you figure out what that timeline looks like. When you get to about 6 to 12 months within retirement, we'll sit down and do a very detailed overview of the Medicare costs, coverages, how to get enrolled, who, what, when, where, how, why. We help you with all of that. We help you pick out the secondary solutions that you need and then get enrolled with all of it. So that way you are never alone in this process. After you become a client, you're a client for life. So we'll help you with all the servicing issues as well. What makes us unique is that all of my Medicare advisors in the office are salaried employees. So you're not calling to talk to a commissioned salesperson that's just concerned about what you're going to buy and how they're going to get you signed up for it. So everybody is very patient, warm, friendly, and helpful in helping you figure this out without too much stress and anxiety. And we shop over 20 insurance companies, so that way you don't have to. Our only ask, to be completely transparent, how my company earns money is when it comes time to enroll in your secondary products, your Medicare Advantage or your Medicare Supplement, Medigap. If you allow us to do that paperwork for you, the insurance company pays, the insurance carriers pay my company to do that. And that's how we can in turn offer all of this free servicing and support to you for at no cost. So thank you for giving me that time to give the little commercial, but also know, I need to update this slide. We hit our 1,000 plus 5-star Google reviews last month. So we're very excited about that. So if you wanted a little bit more information on how we work and what people think of our services, just Google HTA Insurance and you can read a lot of fun client stories. Okay, so today we are going to go over all of the parts and pieces of Medicare, what they cost, what they cover, how they work, how they fit together. We're going to talk about the differences between Medicare Supplement and Medicare Advantage, which are two options that you get to choose from once you enroll in the Medicare program. And then we are going to end with all of the when questions. You know, if you're approaching age 65 or you're approaching retirement, you may be curious to know when is the proper timing to enroll in Medicare. So first, start with the very basics. Medicare is the health insurance that becomes available to you when you turn age 65. The age requirement is 65, regardless of what your normal retirement age is. And I should mention, as I'm going through this, all of these slides will be made available to you in PDF format. So you're welcome to take screenshots or take notes, but we'll be sharing these slides as well. So some people probably on this call have a normal retirement age older than 65. That is the age when you qualify for your full Social Security income benefits. But at age 65, that is when you qualify for Medicare. So once you turn 65, you have a decision to make. Do I enroll in Medicare like all of this literature that I'm getting in the mail says I have to do? Or do I have a valid reason to defer my Medicare and enroll later? It can also be available to individuals under 65 if they're on Social Security disability or have any kind of permanent kidney issues. So you may have noticed if you're approaching the magical age of 65 that you get a lot of mail, and even when you're on do not call lists, you get an exorbitant amount of solicitation calls as well. And one of the big messages that they're flashing up there for you is deadlines, penalties, must enroll. And a lot of that's a scare tactic to get you to call them so they can sell you a product. So hopefully I can cut through some of that confusion today. All right. So starting with the A, B, C's, and D's of Medicare, in order to have full comprehensive coverage in Medicare, you will need some variation of Medicare A and B, which is through the Social Security Administration, through the federal government. And then you have Medicare C, which is also known as Medicare Advantage or Medicare Supplement or Medigap, if you've heard any of those terms. And then there's the D. The D is the drug portion. Medicare C's and D's, they have several options available, so it's important that you shop for these and pick out what makes most sense for your situation. Okay, so starting it, we're going to go through each one. Medicare A. Think of A for admission into the hospital. So if you are inpatient, if you are admitted into the hospital, that falls under Medicare Part A. Medicare Part A has no cost. You have earned your Part A because you've paid or your spouse has paid at least 10 years of Medicare taxes throughout your lifetime. If you didn't pay Medicare taxes or your spouse didn't pay them, you can still qualify, but you would have to pay for Part A, and your rate would depend on how many quarters you paid in on the tax system. But my guess is that most of us on the line here have paid more than enough taxes to justify our no-cost Part A. Now, B is the opposite of that. That's the outpatient. A, inpatient, B, outpatient. So everything you're not admitted to a hospital for, doctors and specialists, labs, x-rays, MRIs, surgeries, chemo, even things that you go to the hospital for, but you're not admitted for example, emergency room treatment, or if you're there under observation. My mom just spent 2.5 days in the hospital being observed. She thought, you would think you're admitted, you're sleeping there, but they never formally admitted her on the paperwork because they can bill Medicare differently if they don't. So in any case, if you're not admitted into the hospital, that's most likely going to fall under Medicare Part B as outpatient. And there is a cost to Part B. There's a cost for everybody. The only people that don't pay for Part B are those that are low income and qualify for state financial assistance or Medicaid. But for everybody else, your Part B is contingent on your income. So this is an income-based premium set by the federal government. What you can see here is in 2026, any single tax filer earning up to $109,000 or a household or joint filing up to $218,000 will pay $202.90 per month per person for Medicare. But as you can see, if you earn a higher income, whether you're a single or a joint filer, you would pay a higher Medicare premium accordingly. So a couple things I just want to touch on. First thing, I should mention that this is one of the things that we go over through your onboarding consultation. And if you are a higher income, we will ask some questions to help figure out if that income is going to be changing, if you should be filing an appeal for that premium amount. So the way it normally works is each spouse pays the same premium. You file a joint tax return, it doesn't matter who earns that money, each spouse will pay the same premium based on that combined income. The income that Social Security, is looking at is modified adjusted gross income. You do not need to file anything with them. You file your tax return through the IRS, so they have access to all of this information. If you are not sure what your MAGI is, the closest estimate you should be able to find on your tax return is your adjusted gross income. That's the closest number that's easily accessible that you can see what they're getting from. There's a couple add backs for modified adjusted gross income, which I'm sure potentially Dean's office or your accountant could help you with if you were really concerned about it. But the interesting thing is that they're basing this on your tax return from 2 years ago. So the biggest issue we find is that somebody maybe was earning a higher income while they were working, but now they're retiring. Hence, that's why they're going on Medicare. And they're saying, why am I stuck paying a higher Medicare premium? Because what I earned when I was still working, that's not reflective of what I'm earning now. So in that situation, the answer is the federal government will figure out your income has gone down, but they won't figure it out for 2 years because every year they reevaluate, but they always pull that tax return from 2 years prior. So we don't want you to pay a higher Medicare premium for 2 years waiting for them to figure it out. We will get you the form that you need to file that you've had a life event, you have reduced your work, and that is why your income's gone down. And you can see on that form what you anticipate your income to be, and they will adjust your premium accordingly. And of course, that will get audited when they do the formal review 2 years later. But that's a way to get the premium down sooner. So like I said, you don't have to worry about any of this. I just want you to know that there are solutions. And if you think your income's going to change in retirement, that's something good to talk about when you're doing your onboarding.
And just to add to that, this is one of the main reasons that we have partnered with Tracy and her team. Not many individuals will disclose that. If you go shop it out yourself, you're not going to get much help from that. And that's something that I really want to reinforce with this partnership, is that Tracy's group will make sure that you're not stuck paying 2 years of extra premium, because it can be substantial if you look at those increases. Another thing that, yeah, thank you for pulling that back up. Another thing that a lot of people reference is IRMA. So if you've heard the word IRMA, this is what they're referencing. And it's so important that you work with a professional like Tracy's group to make sure that you're dotting all the I's, crossing all the T's, because we certainly don't want you to come out of pocket for an additional premium expense if you don't have to. So I just wanted to reinforce that. Thank you, Tracy.
Thanks, Dean. And one thing to Dean's credit there is you do want to find out in advance, because when they do that formal review 2 years later, if you overpaid, they're not going to pay you back. But if you underpaid, they certainly will charge you the difference that you owe and what you should have paid based on that income. So discussing that in advance is very important, because there's no way to recoup it after the fact. Yeah, and just as a side note, while I'm moving over here, when it comes to Medicare, the reason you can't find help like this is because Medicare A, B, and D, 3 out of the 4 parts of Medicare are regulated by the federal government, and insurance agents can't sell these plans to earn a living. So most insurance agents just help you with the Advantage and Supplement piece, but that's not the piece where everyone's the most confused. So we just thought it was the right thing to do to help with all parts and pieces of Medicare, even though they're not legitimate insurance products that we can earn money on. So, okay, so if you had Medicare A and B only, this would be your out-of-pocket expenses. We would never recommend that you have A and B only, but just to give you an idea, Part A, inpatient hospital, you would have a per admission deductible of about $1,700. Part B, your outpatient services, a very small calendar year deductible of $283, and then you pay 20% after that. And again, this is without a supplement or an advantage. The reason why Medicare A and B alone is so risky is because, look, your out-of-pocket maximum, there's no cap there. So you will pay 20% of the $100 bill, but you'll also pay 20% of the $100,000 bill. And that's why we want to add a supplemental insurance to this to cap your risk at a certain dollar amount so these expenses never become catastrophic. Okay, Medicare does not automatically cover dental, vision, hearing aids, like long-term care type stuff, assisted living, home health aides, nursing home. There are other insurances that do cover this, but it's important to know that a lot of people think when they go on Medicare, all this is taken care of, and it's not without additional insurance. Okay, so we talked about A and B. Let's get into the C part. Remember, I said there's two ways we can do this. We can do Medicare Advantage, or we can do Medicare Supplement. You may have heard the term Medigap. So Part C and Advantage, these two terms mean the same thing. Medigap and Medicare Supplement, these two terms mean the same thing. So if you hear them, they all can be used interchangeably. Regardless of what you choose here, you're going to need your Medicare A and B, and you're going to need to pay that Part B premium to the Social Security Administration. But if you go into a Medicare Advantage plan, it's going to be your one and only insurance. It's all inclusive. It includes your A benefits, your B benefits, supplemental benefits, and drug benefits, and sometimes even dental, vision, and hearing. Versus your supplement, this is going to be added on to your A and B. So I'll get in more detail and explain that, but I want to first go over Advantage and then explain how supplement is different. Okay, so do you guys see those commercials on TV? The Medicare commercials, they especially come up in the fall. They say dental, vision, hearing, free vitamins, free this, free that, free groceries, right? Have you guys ever seen those commercials? Yeah, they're talking about Medicare Advantage plans. So Medicare Advantage plans include a lot of extra freebies, like some minimal dental, vision, possibly gym memberships, over-the-counter vitamins, and maybe even a grocery allowance or help paying your Medicare Part B, depending on your situation and your income level. And the way they work is very similar to probably what you're used to with insurance. So here are 3 different examples of Medicare Advantage plans. The one thing you might notice at the top here is look at their premium. They all come at no charge to you. So if you buy, and they do have plans that charge, but they have very good plans that don't charge. So why pay for something if you don't have to? If you have a Medicare Advantage plan, a lot of the plans don't charge any additional premium on top of your Medicare Part B. But you're going to pay co-pays for all your services. So you might have a doctor copay of $0 to $15, specialist maybe $20 to $50, emergency room in the low 100s. It starts to get a little bit more expensive when you're inpatient. You know, you're going to pay a daily rate for so many days. This normally adds up to maybe $1,500 to $2,500 for a hospital stay. But the most important charge that I think there is on a Medicare Advantage plan is infusion therapy. If you get a cancer diagnosis on a Medicare Advantage plan, infusion therapy is a 20% copay, which means you'll be paying 20% of those treatments until you hit your maximum out of pocket. So the good news about Medicare Advantage is, unlike Medicare, it does have a maximum, a cap, where you don't have to pay any more. The bad news is that cap is a little bit pricey, $6,700, $9,300. So it tends to range between about $5,000 and $10,000 for an out-of-pocket cap on a Medicare Advantage plan. Okay, so we talked about Medicare Advantage. Looks and feels a lot like the insurance that you probably think of. You pay your copays until you hit your maximum out of pocket. Biggest risk is a cancer diagnosis with chemotherapy. That can get pricey. But let's talk about what the material differences are between Advantage and Supplement. Advantage, like I mentioned, includes a lot of those extras, dental, vision, hearing. Supplement, if you want them, I call this the a la carte plan. Anything you want, you can get, you just have to buy it. So everything's separate. You know, you pick and choose what you want. If you want dental, vision, hearing, prescription, you buy those separately. When it comes to premium and benefits on the plan, remember I just said there's a lot of Medicare Advantage plans that cost $0 in premium, but you're going to pay co-pays for your medical care until you reach your out-of-pocket, which could be as much as $9,200 in 2026. Versus the supplement. So this is the opposite. You do pay, this would be an additional premium on top of your Medicare Part B, anywhere from like $100 to $250 a month, depending on your state, age, gender. But when you go to get medical care, you pay little to nothing for medical care. The max out of pocket on the most popular Medicare supplement or Medigap plan is $283 a year. So for people that like the idea of lower premiums and don't mind paying a little bit for their medical care, Medicare Advantage may be a bit attractive. For people that say, you know, I have a lot of medical expenses, I don't want to worry about what I'm going to have to pay for them, then maybe paying a little bit more up front to get no real expense on the back end might be more attractive to you. The next piece is access to care. So this is really important, especially as you age and may need more medical care. These Medicare Advantage plans, the way they're able to keep these costs down, so these are managed care plans. So the insurance company, I'm sure with the recent news and everything, we all kind of heard the term managed care come up. The insurance companies have oversight on your care. Prior authorizations, pre-approvals, maybe some servicing limits, things like that. You, your doctor, and the insurance company help make decisions on your care. Versus a supplement, no managed care. You and your doctor make your care decisions. And because it's managed care, the doctors have to decide on the Medicare Advantage plan, do they want to participate with this insurance company and their rules? And that's what makes up those networks that you hear about, the PPOs, the HMOs. These are networks of doctors that have agreed to play by this particular insurance company's rules on their services. So Medicare Advantage plans are going to have networks that you have to adhere to, and they will have managed care. Medicare supplements, no networks, use any doctor that accepts Medicare, and no managed care. So you may be thinking, any doctor that accepts Medicare, what does that mean? Well, 99% of all doctors, non-pediatricians, accept Medicare in the United States. So that's access to a pretty broad network nationwide. The exceptions to that rule, I like to mention, a lot of concierge doctors, you know, the ones that charge the fees over and above the insurance company, a lot of those don't participate with Medicare. We do find some OBs, obstetricians, who are used to dealing with clientele in their 30s and maybe 40s now, having children, and some psychiatric doctors. Sometimes they don't, and that goes with regular insurance too. Sometimes they just don't like to participate with insurance. So those may be the 1% where you struggle with networks a little bit, but otherwise, nationwide network, 99% of all providers. So what a lot of people say is, hey, Tracy, I'm young and healthy. I like the idea of all these extras. I like the $0 premium. Not really using medical expenses, so the co-pays and the networks and all of that doesn't bother me too much. How about I go on an Advantage plan when I turn 65, and then when I start to get sick and having more intensive needs for my care, then I'll swap over to the supplement. How about that? And I would love for that to be an option for you. Unfortunately, when you first go into Medicare, you can get anything you want, no questions asked. But after 6 months in Medicare, you could always get into an Advantage plan, the lower cost one with the higher medical expenses. Each year you can do that. But with a supplement, they're going to ask you medical questions if you try to get in after you do your initial onboarding with Medicare, because they don't want people doing exactly what I just said, waiting till you're sick to get the good insurance. I shouldn't say good insurance, the insurance that pays more for your out-of-pocket risks. These both have a place depending on your preferences. One of the biggest holes that we have seen is that people are not explained both sides of the fence here, so they can't make their own educated decision because you have salespeople trying to sell you one or the other, and that's all they explain to you. Mostly the Medicare Advantage. That's where you're going to find most of the salespeople and the cold calls are calling from.
And just to reiterate Tracy's point there, The most important thing is that you make an educated decision for what works for you. I have certain clients that are willing to pay more from a self-insurance standpoint and find that the Medicare Advantage plan works for them because they're willing to take on more risk. I have other clients that say, you know what, I'm getting older. I don't want the big out-of-pocket expense, and a Medicare supplemental plan works better for them. So it's not a one-size-fits-all approach. It's specifically geared towards what you want and what level of risk you are willing to take on. And that's all insurance is. At its, at the core of insurance is it's risk aversion, transferring the risk to an insurance company and then subsequently knowing what you are comfortable with coming out of pocket. So, work with your advisors as well to come up with a strategy, because if you do have, a good nest egg, maybe a Medicare Advantage plan is the best for you. But, on the flip side to that, some people just want to know I can go anywhere. I don't have to ask permission. I want the best care if I need it. So it can work for, any client, and it's just a matter of making the educated decision, as Tracy alluded to. So.
Yep. Okay, there's a lot of information on the screen. I'm just going to point out a couple things. This is an example of Medicare supplement plans are standardized. So this is where they introduce more letters to confuse people. So plans F, G, high deductible plans, plan N, that's what you're going to see. I'm just going to flip to this screen because plan F is only available to people that turn 65 before 2020. So a lot of people are not old enough to get into this plan F. So plan G is going to be the most comprehensive plan available to you. And what you see here, remember I told you these were all the expenses of Medicare A and B? Well, plan G pays them for you. So if you go into the hospital, instead of paying $1,700, you pay nothing. If your Part B deductible, Plan G will not pay that for you, but it does pay the 20% for you. You pay nothing when it comes to that 20%. So if you look here on Plan G, your maximum out of pocket is that $283 deductible because Plan G pays all of the other Medicare out of pocket expenses for you. And this down here is approximate premiums for somebody in their late 60s in the Mid-Atlantic area. You're looking at somewhere in the ballpark of $150, $160 a month for a Plan G. There's other options which we would talk to you about one-on-one if you wanted to look at some other supplemental options as well. Okay, so just to wrap up this Medicare Advantage versus supplements, the pros of a Medicare Advantage plan are the premiums are low. They come with all kinds of free add-ins like dental, vision, drugs, all of that. It's an all-in-one plan, and you can change annually during the annual enrollment period when you see all those commercials on TV. The cons are you have more out-of-pocket costs if you need medical care. You might have to adhere to some strict doctor networks, and you have to deal with the managed care piece of it and probably a little bit extra administratively on the getting pre-approvals and things like that. And if you want to change to a supplement later, you would have to answer medical questions to do so. On the supplement side, the pros are all around the more flexible and low cost of care. So lower out of pocket, no network restrictions, nationwide coverage, no managed care. So a little bit more flexibility and less cost for your care. And the cons revolve around the premium costs. They're higher premium. If you want dental, vision, and drug benefits, you buy another plan for a little bit more premium. And the premiums can have the ability to go up each year. So this is going to cost you more, but you'll pay less for care. This one's going to cost you less, but you'll pay more and have more restrictive care. All right. The D, the drug plan. So the drug plan comes included with Medicare Advantage. Like I said, that's all inclusive. If you do Medicare supplement, you purchase the drug plan separately. The way you need to find your drug plan is by plugging your medications and the name of your pharmacy into Medicare.gov. So about 2 years ago, Medicare and these insurance companies in their infinite wisdom thought that clients should be able to do this on their own, and insurance advisors should no longer be involved in the selection of the prescription drug plans. So they took that away from us. So what we're able to do to help you with this prescription drug plan is help you figure out how to navigate Medicare.gov. We get right in there with you. Everything we do is on a guided Zoom call, so we can help you and hands-on with that so you can pick out the proper drug plan. I'm not going to go into detail on how these drug plans work because they can be a little confusing. It's easier to look at them once you're in Medicare.gov and see how it relates to your specific prescriptions. But bottom line, if you have low cost generic prescriptions, they're going to be cheap in Medicare, $0 copays, $5 copays. If you have more expensive prescriptions, you're going to pay higher copays in Medicare. But no matter what, no matter if you have tens of twenties of thousands of dollars in prescription, the most you can have out of pocket on prescriptions now is $2,100 per year. So 2 years ago, they decided to cap prescription costs for individuals, which is fantastic because we had some people that were paying $8,000, $10,000, $12,000 a year on their meds. They don't have to do that anymore. And in doing so, they said, now it's easy. Clients have to apply for themselves on Medicare.gov. So we help you figure that out and navigate that. Going back to this IRMA, our favorite word, high income, just like you pay more for the Part B, you will pay more for the drug plans. Drug plans themselves don't have to be expensive, maybe $5, $10, $8, $20, $50 a month. But if you earn more, the federal government will charge you more money on top of that as an income surcharge. All right, let's wrap this all together because I threw a lot of information at you. How does this really fit together for my budget? So this is somebody that's in the base income bracket. They pay $0 for their Part A, $202 for their Part B. If they choose a supplement, that's about $155. Remember Medicare Advantage, a lot of them don't cost anything. Supplement, you would buy another drug plan. Advantage, it comes with, the drug plan comes with. So down at the bottom here, this shows you if you're in the base income bracket, depending on what you choose, you're looking at about $200 to $400 per month per person to be in Medicare, depending on if you want the supplement side or the Advantage side. For each income threshold, you want to estimate an additional $100 per month. So for those in the highest income bracket, earning a lot of money here, none of this changed down at the bottom of the page, but the Part B went up with the IRMA, the income adjustment, and the Part D, the drug plan, went up with the income adjustment. And you can see they're more like $800 to $1,000 a month in this highest income bracket. All right. So hopefully that at least gave you a little bit of security in knowing the really cool thing about Medicare is you could really make it whatever you want. My mom is on a supplement. She loves it. She says, you know, she satisfies her deductible by February, and then for the rest of the year, she gets free medical care. Now, admittedly, she's a hypochondriac, so this works out well for her because she gets second opinions and third opinions and everything else, and she just uses her plan and it doesn't cost her anything, so she likes that. But you really have the ability to make it whatever you want, so it's not something to be nervous about in retirement. Now let's talk about the when, because if you have reached the magical age of 64, you have probably experienced a huge amount of solicitations coming your way, both in your mail, your email, as well as your cell phone, which is highly obnoxious. So, like I said, they're all scare tactics to get you to call them so they can try to sell you a plan. What I want to do today is put your mind at ease as to when you may need to enroll. So, Medicare enrollment when you turn 65 is only automatic if you're already collecting Social Security income prior to your 65th birthday. So if maybe you didn't work, but your spouse did, so you started collecting Social Security at 62 or 63, you will be automatically enrolled in Medicare at 65. You will receive a Medicare card in the mail with your A and your B on it. And if you find out that, and we'll talk about valid reasons to defer, but if you find out that you want to defer, they will let you return that Part B and not pay for it until you're ready to fully enroll. If you're not collecting Social Security income prior to your birthday, enrollment is not automatic. If you want to defer, simply don't enroll. They're not going to ask you why you're not enrolling. You don't need to file anything to say you're deferring. You just simply don't enroll and that will defer you. You don't want to make that decision lightly because you can have penalties, coverage gaps, and deadlines that if you miss them, you can only get in certain times of year. I'm not going to go into detail on any of this because our goal as a company is to make sure that this never happens to you. So, what would be a valid reason to defer Medicare Part B? The only way you can defer Medicare Part B legally without penalties and consequences is if you have credible coverage. Credible coverage needs two things to be valid. It needs to be a group health plan, meaning from an employer, and it needs to be based on current active employment. And that is for the active employment of the primary insured. So if I'm employed at my company and I have health insurance through my company, I'm actively employed from the employer that's providing my group health benefits, I have credible coverage. But if I'm actively employed at my company and my spouse is a dependent on my plan, since I am actively employed at the company that's providing the benefits, and my spouse is on the benefits as my dependent, he too has credible coverage. So it's based on the active employment of the primary insured and that both the employee and the spouse have coverage. That's how you have credible coverage. I think I've said that a little wordy. I apologize. What's not credible coverage is individual plans, Marketplace, ACA, Obamacare, whatever you want to call it, and also group plans that are not based on active employment. So maybe you have a retiree plan from an old job, or you are on COBRA, or you just were let go and you were offered a severance package, or you retired and were offered a severance package. These benefits are not based on active employment, so they are not a valid reason to defer Medicare. You could get some of those consequences. Okay, so if you have credible coverage, there will be no penalties. And this is just a screenshot from our website. What we try to do is every time we talk to you, we send you information so you can see it in writing too. So this would be a link to our website. And if you click on this little button here, we like to cite all of the rules, because one of the things we used to always hear is, why does everybody tell me something different? So not only are we going to tell you what you need to do, we're going to cite it right from the Medicare and the Social Security webpage, so that way you can read it with your own eyes too. Credible coverage deadlines. If you're continuing to work, you have the ability to enroll anytime after age 65 or up to 8 months from the time your group coverage or the employment that it's based on ends. So you will have time to get in once you stop working. So one of the questions that we often get, or I guess statements we often get told is, okay, I know I can defer my Part B, the part I pay for, but what about that Part A, the quote unquote free part of Medicare? My friend told me I had to enroll in that when I turned 65. And the answer to that question is, you absolutely do not have to enroll in Part A when you turn 65. And here's an easy way to remember it. What's a 20% penalty of $0? It's still $0. So you can't pay a penalty on something that you're not paying for. So Part A, you don't need to enroll when you turn 65 if you're going to stay on your group plan, but we normally do recommend that people enroll in Part A. So what would happen if you called our office for that retirement timeline planning? We would explain to you why you can defer your Part B. Here's all the reasons why, but we do recommend that you enroll in Part A. Here's a link to do so right on Social Security's website. It's not going to cost you anything, but it will get your Medicare number established, which is the longest part of the whole process once you go to enroll. So when you go to enroll later, we just have to add the B to it and add the supplemental and the drug plans to it. And that's an easy thing to do once your Medicare number is established. So likely, if you did enroll in A when you turn 65, or you're getting ready to turn 65, we'll probably tell you to enroll in A just to make the process easier later, not because you have to. But if you have a health savings account, an HSA, and I don't know if this applies to anybody on the line, so I'm not going to get in real detail. The biggest takeaway is, if you have an HSA, talk to somebody on my team as soon as you have the inkling that you might want to be retiring soon, because When you have an HSA, you cannot enroll in even the free part of Medicare, or they will not allow you to make deposits to your health savings account any further. Now, I'm talking HSA, not FSA or HRA. I know I'm throwing a lot of acronyms to you, but if you have a high deductible health plan with a health savings account, my recommendation to you would be just call our office 6-12 months before retirement. We'll talk you through it. We'll talk to you about the 6-month backdating rule, how to prorate your deposits in that last year before you go into Medicare, and all that good stuff. I don't want to confuse anybody with this now. Just know HSA means red flag, and definitely talk to somebody before you enroll. Okay, so I told you that you did not need to tell them that you were deferring at 65 if you're going to keep working and stay on your group plan. But when you go to retire later and now it's time to enroll in Medicare, this is when they're going to ask you for your proof to say, hey, you didn't enroll at 65. Show us proof that you had credible coverage, or we're going to penalize you. So this is the proof here. It's a super simple form that we will provide to you to give to your HR team. They fill out your name or your spouse's name. They give the dates you were employed, the dates you were covered. And this is your quote unquote certificate of credible coverage to show that you've had credible coverage. As long as these dates are before your 65th birthday and it shows you've had ongoing coverage since you've been 65, we call it the golden ticket. It's the ticket right in the door to Medicare. One thing I always like to mention, and I'm glad we're doing this in the beginning of the year. So a lot of times people plan their retirement to go out at the end of the year. Actually, you know what's interesting? The second biggest retirement date of the year that we have found is 7/1. We have almost as many enrollments for July 1st as we do for January 1st. But January 1st is definitely the busiest enrollment time. People like to finish out the calendar year, finish out the tax year in their jobs, then retire. If that is you, I just want you to know in advance so you can plan accordingly. There are some challenges with that because we're dealing with the Social Security Administration, and the Social Security Administration is extremely busy year end. So longer processing times, we find that their their volume of mistakes that they make at Social Security goes up that time of year, and longer hold times. I believe that got better last year, but in previous years, we've seen hold times as long as 4 hours for the Social Security Administration. So what we do is we recommend that over the summer, we get started with this process. So over the summer, we figure out your whole timeline. We figure out what plans might make most sense, put together this timeline and make some soft decisions. So that way you can just execute as we get near the end of the year. In October, we'll have you enroll in the Medicare A and or B to ensure that it's all processed and ready to go for January 1. And then as soon as you get your Medicare number, that's when we can start your supplement or advantage enrollment. So the best thing to do is if you're planning a year-end enrollment or retirement, to reach out in the summer. It's a lot easier to get it all organized in your brain before it becomes a stressful situation with Social Security. Okay. So we talked about group health insurance being credible coverage. I just want to make the distinction that if you work for a company, the company that provides your benefits has more than 20 employees, no questions asked. You do not need to enroll in Medicare if you are actively at work on the coverage and your employer has more than 20 employees. This column here says maybe. The only difference is that your employer has under 20 employees. So if you're working, you're on the group coverage, but you work for a small company, that is another what I would call a red flag. This is a reason to talk to somebody because Medicare considers themselves primary insurance to group coverage under 20 employees. So not getting too much in the weeds on this. What I would say is if you work for a small employer and you're thinking about working past your 65th birthday, you would be a really good candidate for a pre-65 planning call because you may need Medicare when you turn 65 if your group health plan is going to be secondary to Medicare. So this one says maybe. All of the people that absolutely need Medicare, if you're not working, you're on an individual plan, or you have retiree COBRA or severance, you absolutely need Medicare. As soon as you find yourself in this situation, we need to talk. All right. I think I just have two more small nuggets for you, and then we'll be wrapping up here. So thank you for your patience. I hope you're getting a lot out of this. Sometimes people that are still working and have access to their group coverage actually choose to go on Medicare instead when they turn 65. So once you turn 65, it becomes your choice. You can keep your group plan because it's credible coverage in most situations, or you can say, you know what, forget this. I have Medicare. I can go on Medicare. And what you're going to be looking at is who gives the best premium savings or benefits to decide what I might want. So we have a widget on our website that we can make available to you where you plug in what you're paying for your group health insurance. And then on the other side, you hit what your income bracket is, and it'll tell you what your approximate payments will be for Medicare. And so basically what you're doing is you're looking at everything you're paying out of pocket. What are your premiums? What are your copays and your deductibles on your group plan to get your total cost in group? And then you're comparing that against Medicare. And for most people, I like to use $4,500 as the break even. If your group health plan costs you less than $4,500 a year, meaning your premiums, your deductible, your copays, all of that, then stay on your group health plan. It's going to be lower cost than Medicare. But if your group health plan costs you more than about $4,500, then Medicare might make more sense because you might have some savings there. We tend to find that the sicker people are, the more they're using their group health plan, the more attractive they find Medicare because they can go into that plan that has that $283 maximum, and then it costs them way less than their group plan. But maybe while you're still healthy and you're not spending a lot on your group health insurance, the group health insurance might make more sense. But we have a widget to walk you through this. We're happy to talk you through this if you have any questions. The good news is that you can waive off of your group health plan when you turn 65 each year during your medical open enrollment and of course at retirement. But a lot of employers consider enrollment in Medicare a valid reason to waive off. So we've had people come to us and say, hey, Tracy, I need to get a hip replacement next month. I have a high deductible. It's going to cost me $5,000. Can I go on Medicare for next month? And I'll say, does your employer consider enrollment in Medicare an opt-out life event? And they say, yeah, great. Let's get you on Medicare and get that surgery covered for you. So once you turn 65, just be mindful if you're ever in a position where your health insurance isn't feeling good to you on your group plan, that's a good time to have a consultation to see if Medicare might be a more attractive option. Just bear in mind, if your spouse is dependent on you for their health insurance, they don't qualify for Medicare until they themselves turn 65. So don't leave your spouse without coverage. All right, I'm going to skip over the rest of this. If you have individual coverage, ACA, Obamacare, COBRA, retiree severance, that is my last red flag where I'd say absolutely talk through that with somebody because it can get complicated. All right. The last piece is the enrolling. And like I said, a lot of these programs are through the federal government, not necessarily through insurance agents, but we want to make sure that you are taken care of holistically. So what we will do is we will give you specific instructions on how to enroll, links. If you open these up, there's links where to go. We say, type these words in this box, word step by step how to do it. And we talk you through it. And then we check in with you while we're enrolling your Medicare supplement and Advantage plan to make sure that the A and the B and the drug plan and everything that's a little bit your homework was done properly. So we're never going to let you fall through the cracks. We're never going to let you miss an enrollment if you're working with us on your onboarding. So that's all I had today. If you have any questions, you can always reach out via phone or email. You can reach out to Dean and the team at Flagship, and they'll put you in contact. Or if you want to schedule an appointment, you can scan this code or go to our scheduling page and it will ask you, are you looking for a pre-retirement timeline consultation, or are you nearing retirement and want to do the full walkthrough of all of your costs and options and everything? So you'll get to choose that. Like I said, we don't charge for any of those consultations. So please utilize it. It doesn't cost you anything and you don't pay more for the insurance by enrolling through us. And I'm with Dean's permission, I'm going to share this screen too. We also do auto and home insurance. So if you wanted anybody to shop your auto and home, I know I've worked with Dean and a lot of his team, or my staff has, helping them themselves on their auto and home insurance. We'd be happy to help you and shop your coverages as well. That's all I have for you today. I hope that worked out well for you, Dean.
As always, you never disappoint. Thank you for the continued partnership. I'm certain that everyone here can see why we partner with Tracy and their team. It's a very consultative approach, and ultimately they will lead you to the decision that works best for you and your family, respectfully. So I encourage you, engage with them 6 months or so prior to that ultimate retirement decision. And or turning age 65, as she mentioned. There are 2 reasons to either do it prior or to just do it afterwards, but engage with them as soon as possible. They put you in queue. And also what happens is they keep me up to date. They let me know, hey, this is the plan that they selected. This is the why. That way I know that you're taken care of. Because the last thing that I want to know or to have happen to you is that you're not taken care of. And that's why we always try to push you to take the consult with them. And at the end, I know she had shown you the one slide where it really broke down all the costs. But after you go through your consult, they will show you what your plan is, what the cost is. They break it down very well, and they show you, this is what you selected. I actually used my father as a guinea pig many years ago, so I really stand behind their process. In line with their property and casualty insurance branch as well, they do a very deep dive on what your insurance needs are. A lot of people, sometimes they'll look at their insurance and when we ask for it, we look at it and we see that they're severely underinsured based on net worth, and they just like, well, we were trying to get cheap coverage. But cheap is not always best. You need to make sure you're adequately insured, especially as you continue to grow your net worth. It's important that you have great coverage, umbrella policies, things like that. Take a consult with them, see if it works for you. They are a brokerage house, so they can shop it out to many carriers. It's not just a kind of one-trick pony. So, the partnership with HTA and Tracy has been wonderful over the last 20 years, essentially my entire career. So Tracy, thank you very much for your time today. Thank you for providing the education to my clients. As always, you don't disappoint. So we appreciate your time. If we will keep this online for another 5 minutes, if there isn't any specific questions that you want to share with the group, please unmute yourself. There's nothing in the chat right now, but if you have something specific, high level that you want to have Tracy or myself answer right now, please feel free to share. If not, reach out to us on an individual level and we will certainly get you the answer.
Sounds good. Thanks so much.
Wonderful. It appears no one is going to ask any questions directly right now. So thank you again, Tracy, for everything. And thank you all for joining us today. Have a wonderful afternoon and enjoy the rest of your spring here. Talk to you soon, guys.
Bye-bye.